Okay, welcome. So in this video, I'm going to show you the order block and how to identify it and how to apply the order block. So you may or may not know that order blocks appear everywhere. It's just learning how to find them, how to identify them, and what to look for. So it's a very simple way to see an order block. Let me just explain a bit about the order block. So the order block is basically an accumulation of orders in a certain area of price. And that order block can either be a bullish order block or a bearish order block. And the ways we can identify these order blocks, they're very similar to bullish or bearish engulfing patterns. So let me show you the first example over here. And as you can see, that this area over here is a bullish order block. Now, a bullish order block, like I said, has contained in itself, in this red box I've highlighted here, many orders. So institutions don't always buy at the same level. So what do I mean by that? They will buy and add to their position. So as an example, they bought some on this area and price rallied up, creating a large order block here. Now, you may think that this is a candlestick pattern, a bullish engulfing candle. Yes, that's true. It is a bullish engulfing candle based on what we see, but I know this as an order block. I have a mentor that taught me, and he traded institutional concepts. He taught this, he created it, and I'm now showing you how I was taught. So this is an order block, and you will notice that order blocks appear on any time frame, whether you look at a 4-hour chart, a daily chart, a weekly chart, 30-minute, 15-minute, 5-minute. Order blocks appear everywhere. The importance of an order block depends on the time frame that you are using. So this example here, this is a 4-hour time frame, but on a higher time frame, you would find other order blocks. It's important to note about the order block is that the higher the time frame, the stronger the order block. So here is an order block. As you can see on the daily chart, this is a bearish order block. So as you see here, this whole highlighted red box is my order block. So how do we know, or where do we know to highlight and use order blocks? Well, it's quite simple, really. So when an order block is created, in this example, this is a bearish order block. So we take it from the wick to the wick of the green candle. So here is the other wick of the green part of the candle, and then the bearish move starts. So generally, when you see an order block, the only reason why an order block is created is because once it is created, you expect a move either to the downside or to the upside if you are looking at a bullish order block. But in this example, this is a bearish order block. So at the top of a peak formation high, as per this example, this creates a very strong order block. Now, it used one candle to create this order block, but in other examples I will show you, there is candles that take multiple candles to create an order block. So let's just see if we can find, it would be a better example if I can find one on the daily chart and then move down to the 4-hour. So this is the 4-hour chart. Let's just highlight multiple order blocks here so you can see that is a bearish order block, because we can see here I've highlighted the wick of the green candle to the bottom of the green candle. Now in some situations, the wick of the bearish candle creating the bearish order block needs to be included in the bearish order block. So let me just show you an example of this over here. So Here is a bearish order block, but we don't just highlight the green candle. We need to highlight the bearish candle wick as part of the order block. So I've highlighted the bottom of the green candle's wick to the top of the bearish candle's wick. And this section here, this whole box, is the order block, the bearish order block. Okay, and the same will be said about a bullish order block. Here is a bullish order block right here. So because it is a bullish order block, we will use the bottom of the wick of the green candle that made the order block. So here is the wick of the bearish candle, and the green candle, the engulfing candle that created the order block, needs to be included. So just to remind you, a bearish order block, we use the bearish candle plus the wick of the green candle, and a bullish order block, we use the wick of the green candle included with the wick of the black candle. Okay, so moving swiftly along, like I said, order blocks appear on all time frames. So this is a 4-hour chart. Let's just take a quick look at the 1-hour chart, and you will notice that order blocks appear pretty much everywhere you look. There is order blocks. Now, some, like I said, think that this is just a candlestick formation, when in fact it's actually not. So I can show you some examples here. So if we just drag this across, we can see that when price came and rallied down, creating this order block, there was a retest into this order block with these wicks. Price then came down and continued down, creating another bearish order block over here, like that. If we just highlight that area over there, and you can see price continued to move down, it wicks in, and then we see over here, in this section, a bullish order block being created. Over here, a bullish order block being created. You can see there that that engulfs the move, and another order block over here is created. Now notice that we have a bearish order block. This is quite a big bearish order block because we can see the size of the wick. And the whole box is the order block, the bearish order block. But notice how price moves into this order block and starts to consolidate. But at the same time, it has made another bullish order block over here. And price continues up and makes another bullish order block. Now notice how price, if I highlight those order blocks, is basically trading inside the bearish order block and inside of the bullish order block. At some point, price needs to break. So if we follow, you will see there's another bullish order block right there, but at the same time, there is a bearish order block over there. Okay, so I'm just making you aware that this can happen, and if you know the order flow, which will be discussed in a different video, you will know how to trade this. But basically, I'm just showing you order blocks, how to identify them, and how to apply them to your trading. So this is specifically, this video is based only on that concept. So as we can see here, at the top of this area of price, another bearish order block was created, and you can see over here, this is also a bearish order block. Okay, so price moves down. If I just make another rectangle here, you'll see there is another order block right over there. Okay, so that is basically the order block now we are looking at. So here was an order block, and if we take it and we look over here, that was another order block at the top over here. Okay, so there was an order block. Here was the second order block, the third order block. Price came down a little bit, traded inside the order block. Noticed how price then wicked into this second order block here. So I'm showing you that these order blocks I haven't just made up, they do exist. There is orders sitting inside of these order blocks, and we're talking about big orders, not just small 0.01 lot sizes. We're talking institutional orders with 1,000 lot sizes, 10,000 lot sizes, millions of dollars in the account. And these are the institutions trading and moving price. Now notice that when price rallied up here, we will see that these order blocks have been intersected with. Notice how this order block over here, it rallied down, price came back up and tested this order block again. Okay, so once price had tested that order block, it then rallied down. Now, another order block was created in this move downwards right there. So this candle over here created another order block, and price came down, traded back up into the order block. It didn't test this order block at the top here, but price rallied down and kept going down. Now notice, I will show you, like I said, that order blocks are not just engulfing candles, but they can also be candles that take more than one candle to create an order block. Now, these order blocks are not as significant or as strong as the order blocks that are created with just one candle. So let me just clean this up here for you, and you can see that this is just one candle. This black candle was just one candle to create this order block. Again, this candle was just one candle to create that order block. And again, you can see there, just one candle to create that order block. Now, this example I have on this over here, this is a green candle that you can see, and it took approximately 3 candles to engulf this green candle. So this can still be considered as an order block, but like I say, it is not as significant or as powerful as the previous order blocks, okay? So it's important to remember this, that there are order blocks that do use more than one candle to create the order block, okay? So I'm just going to show you that order blocks do appear on other time frames. So let's just take a look here at the daily chart and mark up a few order blocks, and let's just see how price reacts off of those order blocks. So this is a daily chart, and I'm just going to mark up this order block over here. So this can be considered a very strong order block, a bullish order block. Why? Well, because this basically was responsible for this big move up here. So you can see price significantly rallied upwards from this order block, okay? And another important, very important concept to know about the order block is that when price comes into the order block and tests the order block, so if price had to come in there, it would most likely bounce because it is a very strong order block, okay? Now, price can either wick inside the order block, or the price can close inside the order block, okay? When an order block becomes invalid is when price goes below the order block and the candle closes below the order block outside of, when you mark it up, you'll see there, when the candle closes outside of the order block, we regard that order block as violated. So we say that the order block has been violated when price closes outside of the order block. And the same can be said for a bearish, a bullish order block. Price pushes through, and notice that only candles that close outside will violate the order block. If price wicks in and wicks past, but closes either inside or above, that order block has not been violated, but it has been tested. So there is a difference between price just testing the order block and then violating the order block. Okay, so like I say, price needs to go down and close below for it to be violated. And if price bounces off the order block, well, then it's just tested the order block. Okay, so it is only invalid once it is closed below the order block. Okay, so let's just zoom out a little bit over here, and you can see that this particular order block I've shown you here, there is no test of this order block. So it is still a valid order block. And when price comes into that level, you can expect some sort of bounce off of that order block. And you can see there's actually another order block inside that one. So let's just zoom back in there. That is actually another order block inside that order block. Sometimes more than one order block can be created inside of an order block. Basically, like I say, it tested the order block. So this candle over here, price rallied up, tested the order block and bounced off. So this, as the retail would say, this is support. So when price there comes, they will say that this is support. They won't know that this is an order block. This is an order block. Okay, so this is the daily chart. So let's just take a look at how price reacts on order blocks. Okay, so if we take a look at the top, we will mark up our first order block, which is responsible for the significant move downwards. Okay, and if we mark up another order block, you will see that this black candle over there, if I zoom in, is also an order block. And you can see, so when price rallied down from this large order block, okay, price then rallied back up into this order block. Obviously, this was not an order block yet until price created the order block, okay? So notice how price tests the top of this order block and creates another order block. Again, price goes down from this order block and into this upward move, almost testing the wick of our order block, our large order block over here. Okay. Price, however, did not touch that order block and continued downwards. What did it do? Well, another order block was created. Remember what I said about order blocks is that it takes or can take more than one candle to create the order block. So as you can see in this one, here is the big green candle, and it took two bearish candles to create this order block. So this is still an order block, although it took two candles. It is not as powerful as a single candle order block, but it is still an order block nonetheless. And inside that order block, another order block was created. So if I mark that up, you'll see there that that is another order block. So I include the bearish candle wick to the bottom of the wick of the green candle, and that is my order block right there. Price then rallied down, rallied back up, tested these other order blocks, and then rallied down. So you can see that order blocks are real, they do exist, and price can and cannot sometimes respect them. It's just a matter of which order blocks you choose, which leads me to the next part of the video, is knowing which order blocks are important and which order blocks are less important. Well, like I said, when you see a move from, say, a peak formation low or a peak formation high, the order blocks at the top of those areas will be stronger than the ones inside of the trend. So what do I mean by this? So like I said, when order blocks are created, for instance, this order block here, this is a bullish order block. This will be a strong order block because of the fact that it is at the bottom of a peak formation low. And this order block at the top over here will also be a strong order block because it is at the top of a peak formation high, okay? And sometimes when you get an order block, you will see other order blocks inside the larger order block. It's important to mark them up and know that they are there, even though they are inside the bigger order block. Now, sometimes your chart can get rather busy. So what I generally do is I reduce the amount of blocks I have on my chart and just mark up the larger order blocks so that I know when price gets to those areas on the chart, I can see some sort of reaction. Okay, so let's just have a look at this bottom order block over here. So we can see that when this order block was created, price rallied up and price then pulled back. Where did it pull back into? Basically the order block right here. Okay, so price then rallied up from our bullish order block because it is bullish, so we are expecting bullish movement. So when price rallied up from this point in price, there was a bit of consolidation, but again, another order block was created using this candle right there. So another order block was created. Okay, so when that order block was created, price rallied up. Okay, so that is showing you that order blocks are important. Okay, and they do react. Price does react on order blocks. Okay, so I will cover the institutional order flow in another video, but for this video, we are only looking at order blocks. So the lower, this is now a 1 hour chart. Let's just look at a different pair. For instance, this is Euro CAD, okay? So let's just say that this was the peak formation high of recent price. So here we can see an order block created right there. But like I said, that sometimes you will get multiple order blocks inside other order blocks. So that is our first order block that started the move down. And you can see when the 4 hour candles close that the order block was created. Now notice another order block here was created in that price zone. Okay, so we mark that up and we can remove the smaller order block to keep our chart less cluttered. So what did price do? Price moved down, rallied back up and tested our order block. Okay, another order block over here was created, testing our larger order block, and price moved down. Okay, another order block. Now we are obviously starting a bearish trend, as you can see here, is that this is another order block. Okay, so I can do this all day. I can show you how many order blocks appear, but the more you see on the chart, the better you will become. It won't be easy your first few times, but you will eventually take a few seconds and you can see bullish and bearish order blocks, no problem. So for the sake of this video, to keep it nice and short, let's just move the price of this order block across. Okay, now notice that while price was trading up and down, bounced back up. What did it do? It tested our order block and price rejected down. It tried to rally back up, but was rejected off of our order block right here. Price rallied down, small pullback, large move downwards, and then a large move upwards. Now notice again, price, when it rallied to its recent peak formation high over here, here is our order block right here. This is our order block. I've marked it up, and as you can see, price rallied up into the order block and maintained the order block. The order block was not violated, even though you can see that price wick there. The candles did not close outside of the order block, and then price moved down. And you can see that price has not come near that level again. But it's important to note that while this was happening, you could see that other order blocks were being created, giving you multiple opportunities to enter trades. Now I'll show you in the next part of the video how to use the order block to take entries using the order block. So as a general rule of thumb, I like to use either the start of the order block or the 50% of the order block. It's quite easy to know this. So here, let's just use the example of this order block over here and this order block over here. So you can see that this is now our bearish order block. Now, generally, what you would want to do is you would want to say that at the 50% level of the order block, the 50% is basically from the body of the engulfed candle, the 50%, the halfway point between the bodies is your entry point. However, you can also split your position and enter at the start of the body. So what do I mean by that? So when price rallied down all the way to the bottom here, it then touched the opening of that green candle, as you can see there. So that would have been a good entry for you, and it had just touched that green candle and price rallied down. Now, what I mean by the 50% is, as you can see over here, that is the halfway point of the body of the green candle for this bearish order block. And price did touch that order block, halfway point, 50%, and then rallied back down. So you can take a position at the bottom of the body of the engulfed candle or the halfway point. So this halfway point is basically called two things. We can either call it the 50% of the order block, or we can call it the mean threshold. So the mean threshold is basically just an alternative way of saying the 50% of the order block. So you can take an early entry over here of an order block, or you can take a 50%. So generally, depending on the setup, you can take either one of those two trades. So that is, in essence, what a sell limit area could look like. Now, I personally trade only sell and buy limits based on order blocks and other multiple confirmations I'm going to show you in other videos. But for this video only, we are only looking at order blocks. So price consistently respects order blocks. And obviously price will break order blocks. but you need to know that order blocks exist. Now notice here, this was an order block at the top of this peak formation high. Price then rallied down, small retracement, down again, and back up. It then retraced back into our order block, and we've marked up here our order block. And what happened again? Another order block over here was created. Now it's important to know that this won't happen all the time. Order blocks won't be created inside order blocks, but when they do give you additional confirmation that there is a good chance you will have a move to the downside. So here you can see a move to the downside, and here you can see a move to the downside. And this happens over and over again. It's important to know another point of an order block. So let's take a look at this one. Now, this, like I said, is not as strong as other order blocks because of the fact that this is a trend to the upside. Okay, I'm not drawing a trend line. I'm just showing you that price is already in a trend and it is moving upwards. Okay, so you would want to rather look for order blocks at sort of the peak formations low, like I previously said, or you'd want to look at order blocks at peak formations high, like I said earlier in the video. So choosing an order block in the middle of a trend for a potential swing or a big move isn't a good idea. However, you can use order blocks in the middle of a trend to potentially catch a few pips, on a scalp. Maybe you want to catch 20, 30, 40 pips, and that is quite easy to do. So if you look over here, this is basically small trend that we saw here. This was a small peak formation high after the rally from this large move to the downside. And you can see that if we had taken a sell at the 50% of the order block, like I said, depending on your stop loss, so you can see there, that's a 40 pip stop loss, and you could have caught 28, 30 pips there. Now, that's not a very good risk to reward ratio, but the important thing is to move, obviously, your stop to break even. Now, generally, you want to be catching the order blocks that are at the bottom or at the top. So this is the kind of order block you'd be looking at the bottom of the trend or at the top of the trend. Catching middle order blocks are either adding to a position you're already in or potential reversal waiting to happen. But those will be discussed in later videos. Again, I'm only showing you order blocks and the significance of the order blocks. Okay, so let's just pay attention over here. So this here is an order block. Now, even though that this looks like a doji candle, there's this second candle and then this third candle created the order block. Like I said, it's not a strong order block, but it is an order block. Okay, so if you move, that is your order block. It's a large order block, but it is still an order block. So price then rallied up, bounced off of our bearish order blocks, and you can see there was some small ranging and consolidation on the 4-hour time frame. Price then rallied down into this order block over here and then rallied up. Okay, so in a nutshell, that is the order block for you. And like I say, they appear on multiple time frames. So this is the 30-minute chart on AU, and again, order blocks appear on any time frame. So here is recent price. That is an order block on the 30-minute. Again, over here, this is an order block on the 30-minute. Now, they are obviously not as strong as the 4-hour order blocks, but they are, however, order blocks, and they can be used, like I say, for different trading styles. They can be used for sculpting, intraday, swing. It depends on your style. And obviously the order block is just one concept I'm going to show you. This is still the first video, but everything I'm going to show you will be a puzzle until all the videos have come out, and then it is you as the trader that learning this to piece together all the puzzles. So let's just have a look here. Here is an order block. Okay, so that is an order block on the 30-minute right there. If we mark that up there, so this area here is our order block, and it was created. And if I just drag it out over there, you'll see that price did come in there, it wicked inside, and it did create this order block over here. Another order block over there, and then this big move to the downside over here. So I'm just going to show you how important order blocks are on higher time frames. So let's just take a look over here at the daily chart of AU. So if I mark up this area as an order block, now remember this is a bullish order block over here. So this bearish candle was engulfed by this green candle. And I say engulfed because everyone's familiar with what that means. It takes our price trading in this zone and it engulfed it. Okay, so I've marked up this area over here as my daily. Note how this is a daily chart, and I've marked it up. So now I'm going to go down to the 4-hour chart just to show you the importance of an order block. Okay, so like I said, this is a daily chart, and now we have gone down into the lower time frame of from a day chart to a 4-hour chart. So if we notice, like I said just now, that is also an order block. So now not only do we have the daily order block over there, we also now have a 4-hour order block in that zone. So let's say price had gone up from this zone, okay, and price was starting to head back down, and price had not gotten into our daily order block or our 4-hour order block yet. Okay, so let's say the price hadn't got there, but we could see that it was making our way down. So we've noted that these two red blocks here are now our order block. So what I like to do is that just to differentiate between the daily chart order block. So the daily, I normally like to use dark blue, and then on the 4-hour, I like to make a red box just to identify it easily, so I don't get a bit confused as to what's actually happening. So you can see the price rated out, and now we are waiting for price to come into our zone for a potential buy. So we can actually then go even lower if you wanted to get a better entry. Okay, so we've already now highlighted that price is coming out into our zone over here. Okay, so what we can actually do is that when price comes and continues down into our zone, and remember we've marked up on the daily and the 4-hour chart order blocks, so we can now use the 1-hour chart to mark up additional order blocks. So not only have we now used the daily, we've also used the 1-hour chart, and I'm going to again use another color just to differentiate between the different order blocks. So when price rallied up from our daily and our 4-hour order block and started coming down again, and price trading down, we can see it basically respected our 1-hour order block, our 4-hour order block, and trading inside our daily order block. Now it's important to see that the daily order block is a large order block, so you can expect a wide range of price to occur inside the daily order block, but the general move should be bullish because of this daily order block that was created in that zone right over there. So when price came back down, you can expect a move to the upside because this is a strong daily order block. So if we look now at the 4-hour order block, which is the red box, you can see that price only came to about halfway of the 4-hour order block and only tapped or just touched our 1-hour order block and sent price on its way up. Now, this is the ideal way to trade and use order blocks, is to identify multiple order blocks inside higher time frame order blocks. So like I just showed you, this is a daily time frame. I've framed up my entry for a move to the upside, and then I went down into the 4-hour chart and created the red box, which was the 4-hour order block. And then I went on to the 1-hour and I marked up this order block over here as another order block. And as you can see, when price came down, it basically just tapped off that order block and price rallied up. So what is the importance of this? Well, instead of catching a trade and using a small lot size, you can use a large lot size and still use the same amount of risk. So what I mean by that is, let's say you take your entry off the 64,100 level for this example, just like that, okay? And you know that because price has already bounced off a previous daily and a 4-hour order block, you are expecting a bullish move. So what you can do is you can set the halfway point, the 50% of the 1-hour order block as your stop loss. So you can see that if I do that and I enter over here, my stop loss is only 23 pips. Now you might think that's quite a small stop loss. Well, it's technically not. If you already know that price is going to bounce off a particular level, well, then your stop loss is correct. And if you are worried that your stop loss could be hit, I mean, we're only using a 23 pip stop loss. I like to trade with a maximum 30 pip stop loss. So that would put basically your stop loss at the bottom of the 1-hour order block. So you would enter here at the 64,100 level and have your stop around over there, and that's about a 30 pip move. So that's a very good high risk reward ratio trade. And if you did enter it, you would have had 180 plus pips. Now it's easy to say this once chart data has already applied and price has already happened and we're looking in hindsight at past history. But these happen all the time where multiple time frame order blocks inside other time frames occur, and you can expect reactions off those zones. Now, this is obviously just the order block, how to apply it, how to identify it, the video for that. Now, in the next couple of videos, I'm going to show you other concepts that you will use as additional confirmation or a reason why to take the trade. And there's about 8 or 9 others I'm going to show you. In practice, there's actually probably about 25 to 35 other confirmations, but it's a lot to take in as a new person learning this concept. So for that reason, I'm only going to show about 10 or so maximum concepts, at least for this half of the year, and see how everyone does with that. And if more people are interested in learning more, then I can look at releasing more videos. But for now, I'm just showing you the order block. Okay, so let's just let's just move on to another chart on EuroCAD. Or actually, let's just pick another pair here. Let's just pick CJ here. So as you can see, I trade on a naked chart. I don't use any trend lines, and basically I draw my own indicators of price and price data of previous price data. I don't use moving averages or RSI, Bollinger Bands, MACD, or whatever else you want to call it. I don't use any of that. I just use pure price action and the candlesticks to identify price levels. In other videos, I'll show you other tools that we use as well, also not really indicators, just to show us what price is going to do, potentially do. And it's also important to remember, nothing I'm showing you is the holy grail. It takes practice to learn these things, and if you're not willing to learn, well, then this is not for you. But you will be, once you learn these concepts, more than 70%. I would say I'm about 80% accuracy on my trades, and then the other 20% of the time, well, that's just the market for you, and you will lose trades. So this is CJ over here, and I've marked up a bearish order block. So this is a bearish order block on the 4 hour, and this is quite far. Okay, it's not that far. So let's just look at that 4 hour order block that I've marked up in the red blocks. Okay, and you can even see inside that 4 hour order block, there's another order block on the 1 hour chart. Okay, so like I've showed you, here is the 4 hour order block, and let's just make this 1 hour order block a different color again so we can differentiate. So the red box is the large peak formation high order block over here, and that is a strong order block because it is at the top of this big down move. And like I said, we have other order blocks over here, so that is also an order block. And if I would appreciate it, if you are going to follow my strategy, if you can please use the same coloring. I will post these colorings in my channel on Telegram, but it just makes it easier so that if we share chart markups, we can identify what is happening on the chart that you show. So here is the top of this peak formation high, and then this big move to the downside happened until this bullish order block was created. Okay, so remember what I said, that even if price comes down and inside the order block, it wicked through. Notice how price wicked through over here. So that was the bottom of this move to the downside, but it did close inside our order block. Okay, and then price then rallied back up. So when it rallied back up, I've marked on the 4 hour chart this big bearish order block over here. And if we look down on the 1 hour chart, when price rallied up, it created another order block, a 1 hour order block. Okay, so what we can essentially do is, now that we know we've hit this order block on the 4 hour time frame, having come from this big trend upwards, and now created a 1 hour order block, and price, as you can see, moves down. So price will move down, move back up, move back down. So what you can essentially do, like I said, is that you can set your limits, your sell limits or your buy limits, or in this case, a sell limit, at the areas of the order block. Okay, so if we use the 4 hour chart, you'll see there, like I said, if we use the 50% of the order block, so that is the 50% level of the order block. So this red line over here indicates the 50% of this order block. Remember, this is a bearish order block. So we use the green candle halfway point of the body. So it's important to know that the body is where we measure the 50%. So even if this candle wick went right down or right up, we still use the body as the 50% because that is where the volume of price was traded at. So you'd see there you probably would have been taken into the trade if you'd entered there. Or if we move our 50% level across, depending on your broker, you may have been entered there. Okay. What I also did say just now in the video is that you can also use the green candle opening as an early entry. And notice how price would have taken you in at the top over here, and you would have caught this nice move to the downside over here. Now, the idea behind all of this is obviously, as I said, the high risk reward ratio. So when you are taking trades like this, you'd want to set your stops real tight. Like I said, 30 pips max for me. I'm a patient trader, so I let price come to me. I don't chase price. So that is why I only trade limits, sell limits, or buy limits. I don't use stops. I don't use buy stops or sell stops. I only use buy limits or sell limits. Obviously, I use a stop loss. I just don't use the limits that are for when price exceeds a level or moves down a level. And I prefer to be using the limits. So the sell limit and the buy limit. So as you can see here, price then moved down and into our order block over here. You can see that there was another order block created inside of this order block, and price rallied up, bounced off our bearish order block and into our other order block. So for the sake of this video and this chart not to get too cluttered, obviously I've showed you that order blocks do appear in multiple time frames, and they do appear all over the chart, and that it is important to differentiate between the different order blocks. So the top order blocks are obviously strong order blocks, and same for the bottom order blocks, they are strong order blocks. So the next videos will explain other concepts relating to the order blocks and how the institutional order flow works, but I will think about releasing a second video on order blocks. But it is important to know and practice how to identify order blocks and how price reacts on order blocks. So you can see that price reacts on our order blocks all the time. All the time. And you can see if I move this up, this is an order block over here. Here is another small order block inside the trend, traded into this bearish order block, and then direction was briefly changed. More bearish order blocks was created there, and other order blocks that were bullish were created over here. A move to the upside, retest. Where did it retest? Back into our order block, and price then rallied back up past our previous order blocks. So I'm just going to clean this chart up, and we're getting towards the end of this video, but I just want to do a quick recap of what I've covered so far, and that is the order block. So order blocks are essentially bearish or bullish engulfing candles that institutions group their orders in, and large movement takes place from those order blocks, and they appear on multiple time frames. So order blocks on higher time frames are more powerful than order blocks on lower time frames. Whether it's bullish or bearish, it doesn't matter. Higher time frames take precedence over the lower time frames. So if you just look, 5-minute chart also has bullish and bearish order blocks all over, but they are not as strong as the higher time frame order blocks. So continuing the recap, we know that order blocks appear on multiple time frames. The bullish order block and the bearish order block look similar. They are obviously just dependent on the direction. And we've also said that when we look for entries or buys or sells, when price tests an order block, we want to look at either the 50% of the body of the bearish or the bullish order block. So the 50%, or the start or the open of the candle that created the order block. So that is the start of the candle. And for the bullish order block, that is the start of the candle over there. So those are the areas we look for buys or sells when price reaches it on the order block. And lastly, to cover the order block, we also know that when an order block is created, we want it to be respected. When price does not respect an order block, over here, price respected it. So when price rallied up and came down, it tested the order block and bounced back up. We can see price again bounced off the order block and rallied back up. It's important to know that when price rallied up and came back into our order block, it violated the order block but created another order block. So it violated the order block, closing outside of the order block, but created another strong order block right over there. So depending on the price action or the pair that you're looking at in the time frame, you need to see that price either respects the order block by bouncing off of the order block, like this example over here, price bounced back up. But when price came down to this level over here, it didn't respect the order block, but created another order block. So essentially, if price did not respect the order block and this order block here was not created, we would have possibly seen a move to the downside instead of the move to the upside. So I just want to show you again the last recap. Let me just clear this chart. So like I said, we use multiple time frames and frame up our entry, and we can identify other order blocks on the high time frame. So let's just have a look here. This is a weekly chart. So on a weekly chart, I like to use I think it's lime color. So I know that that is a weekly chart order block. I will now go down to the daily time frame, and I will spot order blocks on the daily time frame. I said that I like to use the dark blue color to identify the order blocks on the daily chart. So there is our order block created over there, and you can see more order blocks inside the daily chart were created. And notice how price reacted off of our weekly order block, the green box, our daily order block in our daily chart. And if we go down to our 4-hour chart, right from the beginning, we can then additionally mark up further order blocks on the 4-hour time frame, and we can see how price respects those levels. So I just make it red over here. So that was an order block. Again, another order block over here. And price rallied up. price rallied down into our daily and our weekly. Notice how we're still trading inside of our weekly order block that was created back here in the day, and then rallied down into our daily order block. At the bottom of our weekly order block, price rallied up inside of our daily order block, inside of our 4-hour order block that was created here. So you can see that this order block over here was violated. You can see price went down, violated, closed outside of it, but it bounced off of our daily order block, our blue box, and our green box, our weekly order block, and did a rather large movement. So when it bounced off of this level over here, it was still inside of our weekly order block, but you can see that price then came back down, and you can see that another order block actually over here was created on the 4-hour chart, which has not been tested yet. But you can see that order blocks are created all the time. And if we just zoom into the price data over here, we will see another order block when price came down to this level. Another order block was created right over there. So when price came down to that level, it was still inside of our weekly, still inside of our daily, and now it is trading inside our 4-hour order block. Remember, this is still a valid order block all the way back here, because even though price wicked outside of it, it did not close outside of the order block, remains valid. This order block remains valid and not violated. And we also created another order block when this price rallied up here. So price rallied up and came back down into our order block here. And you can see it rallied just above our order block, creating another order block just like that. And then price rallied up from that zone into the next leg outside of our weekly order block. So you can see how important multiple time frames are with the order block. The order block isn't just one time frame, it's many time frames. And the more order blocks you can identify and use them on different time frames, the better you will be at spotting good trades. This is essential for any good setup, is to see that there are order blocks on higher level time frames, lower level time frames. I generally like to use all the time frames except for the 1 minute, the 5 minutes, the 15 minute. I generally only trade from 30 minute to the daily chart at any given time during the week. And that concludes the video for order blocks, identifying and identifying the order blocks and, looking for valid entries, how to spot them, where they appear. And if anyone has questions, I would appreciate you leaving comments on the YouTube video. If it's not for you, just move on. I only cater to a small group of people, and there's people that may want to learn the strategy, that may not want to use the strategy. So up to you. Like it, don't like it, doesn't bother me. It works for me. I trade this way. I trade a clean chart. So it's not for everyone. I understand that. But thanks for watching. And I'd appreciate if you give me some feedback based on what you see in the video. Thanks.